Welcome to TheoTrade. This is Don Kaufman. Here we are on March 2nd, 2016. It's a Wednesday afternoon in trade. There's still about 40 minutes to go in the trading day, but I thought what better time to discuss markets when the markets, of course, are still open. And the theme tonight, what to expect when the expected move expects absolutely nothing. That's right. What to expect when to expect nothing. What does that even mean? It means if you take a look at the SPX, I talked about this a little bit in the chat room. So if you guys watch some of the chat room, the archive footage in there, it discussed this in quite some extent. But just recently, the SPX added a intra-week expiration. You're like, what does that mean? There's a Wednesday contract now, so it expires Wednesday. It's one of the weekly contracts. So as you start to you look down the list, there's like 0 day and a 2 day and a 7 day and a 9 day. And I talked about this recently in one of the weekend videos. But today, it's quite insightful. Why is it so insightful? The implied volatility in the expected move is for right here. It's for today. So there's still 40 minutes left to trade. What it's saying is right now, the SPX, is at 1981. The 1980 puts, well, they're trading for less than what? Less than nothing. Now, there's a good amount of volume. There's a good amount of open interest in these things. So, you're going to ask, can I trust the contract? Well, there's tens of thousands of contracts that have traded. Literally, there's like 10,000 contracts of these calls. But if you look at the price of the calls, add them to the price of the puts, the expected move right now is like $4 and change. In fact, even this morning, the expected move was only $10. What does that tell you? And I cannot stress this enough. It tells you right now, traders that have skin in the game don't expect anything to occur, for example, in the next 40 minutes, but they didn't expect anything to occur today regardless. So that's why I call this day what to expect when the market expects nothing. And the part that I want to just, overemphasize in the, largest terms I possibly can. Everything that traders have tendency to look at. So here's a 9-month chart of the SPX. It's what do you think is going to happen out here? What's going to happen out here? Let me look at my Fibonacci's, my Bollinger Bands, my stochastics. Oh, they're overbought, they're oversold. Every one of those is going to be based on previous price action. There's nothing telling you definitively what's going on out here in the future, but expected move is doing just that. What do you mean? Well, there's tens of thousands of contracts trading over here. Hundreds of millions of dollars are being traded on either side, of these options. You better believe this is, again, skin in the game over there. So having this extra contract, when I thought about this last week, I'm like, oh, come on. Is there not enough crap on our screen? Huh? Am I the only one that thinks that now? You got weeklies. You got weeklies on weeklies. You got midweek weeklies over there. You're like, when are the dailies coming? Well, these middle of the week weeklies, they're to coincide with the volatility futures that also have weekly expirations, yada, yada, yada. It's another contract. At first, I didn't like it, but now I like it. I like it because it's giving me a much better feel throughout the course of the week. What matters, what doesn't. You got a 7-day, you got a 9-day over here. I think I like it. And not necessarily to trade. I think I like it because it helps me distinguish what the risk is, throughout the course of the week. And again, it's the only thing you got, all right? That's like skin in the game. So then I look at the 2-day, and the 2-day is still, looks like a $21 expected move. Let's just get crazy here. Let's round it to 22. There's a $22 expected move. Why should that matter? Well, that's very interesting. Because if you go over here and you take a look at a calendar, all right? I know, I'm trying to click the calendar over here. Go over here and take a look at the calendar. There's the employment situation that's coming out Friday morning, which ultimately tells me that almost all of this $22 of movement is kind of being priced in for the employment situation. Kind of tells you it's going to be a little bit of a lackluster rest of the week over here. That's it. We made our rally, okay? Now we don't know what to do. And that's precisely what the market's saying. So I'm sure there's all kinds, of the talking heads. I'm bullish, I'm bearish, I'm this, I'm that. The market is saying otherwise. The market is actually screaming right now. I don't know nothing. If you don't believe that, look over here at the advanced decline line, right? We're 6 hours plus into the trading day. All right, literally 6 hours, almost to the minute into the trading day. What's the advanced decline line? 50-50 in the S&P 5 or S&P 100. You want to look at the S&P 500? We can do that too. We can go over to the S&P 500. What's it going to tell you? Absolutely nothing. Oh, look, there's one stock. It's up nicely. Anyway, I think you kind of get the point over here. Indecision is everywhere. Once again, I resign myself to discuss market is about catalysts. So the catalyst, it's just like, if you look at the market right now, the volatility has actually subsided quite substantially, okay? But the volatility is still rather recent. We're taking a little bit of a breather right now, but you still have to look at the market as just a pool of gasoline, and it's feeding on anything that it could possibly get its grubby little paws on. And if you take a look, this is what I mean by a catalyst. Once again, this is an oil report. Like, since when should the oil report be rocking the S&P futures in this kind of a range? And that's exactly what we're seeing. I mean, the S&Ps have a range from 1966, okay, up to 1979. They were good years, yes, but all right. Yeah, I was actually making reference to the year 1966. It's a little bit before me. But, hey, here's my decade, the 70s. Anyway, it's a 10, 12-point move off of the oil report this morning. Fairly extreme move. Keep it in mind over there. Again, we're searching for catalysts. So you got to look, and you got to go back, not necessarily to advanced decline lines. You got to go back over here to the calendar. And you have to realize that, sure, there's a few things coming out on Friday, the employment situation. But one thing that makes me a little bit edgy over here, there's a 10-year note auction coming out tomorrow. Maybe 1 in 10 of those actually moves markets, but it is something worth considering. Keep your eye on the ball over there. Again, as of right now, market's taking a breather. There isn't anything definitive to discuss. Financials still relatively strong versus the rest of the marketplace, but that can all change, right? The bonds right now are elevated by 14 ticks. But we're also seeing the financials have follow through. They're closing right into that 22 level now in the financials. They've been the strongest of your major sectors. Okay. The next move, look for the financials to be on the forefront of that move. Again, the next move to the market, look for the financials to be on the forefront. And right now, okay, they've actually rallied to the upside. Now, myself, I got a lot of bearish positions on. And I kind of like where we're at right now. I mean, you have to expect this kind of trading action. You have to expect, utter ugly moves that you don't necessarily think are going to happen on a day-to-day basis. But it's all within a comfortability level and how much risk you're capable of sustaining. Thanks, everybody, for joining us here at TheoTrade. This next week, March 9th, we are going to have a class, 7 p.m. Central Standard Time. Again, that's 7 p.m. Central Time. That class is going to be Iron Condors. So get ready, Iron Condors. All the criteria that really goes into the Iron Condor. Something that we haven't really done here yet at TheoTrade is discuss a very specific strategy and all the entry and exit criteria. And I have to say, my trading, it's not about the strategy. Anybody can read what the Iron Condor is. I'm actually going to provide a tremendous amount of detail and insight into why do we get into the trade logically? Why do we actually exit the trade at certain levels? How far out from expiration? What delta, okay, should we go out there and sell premium? Which delta should we buy? All of that will be covered. Again, it's going to be March 9th. That's Wednesday, March 9th at 7 p.m. We're looking at probably about a 2.5 hour class. Again, thanks everybody for joining us here at TheoTrade.